Hi, today I'd like to show you the triangle pattern forming on the FTSE 100. So here we have a daily chart of the FTSE, and the big decline we saw in October last year, that was the start of this triangle pattern. From the low, I think it was 60.72, we saw a big rally in November, and that was wave A. And then after that we saw a sharp decline for wave B. Then we got another rally, which is wave C, a decline D, and now another rally, which is wave E. So if you look at this pattern, because a triangle is in 5 waves, we've got the 5 waves. So it could be that the rally is over because wave E is over. Okay, so that is one scenario, one triangle scenario. You can see that wave E is lower than wave C, a bit lower. So this is why this triangle is valid. However, there is another pattern, another triangle that I want to show you. And this is a problem when trading triangle. Sometimes you are not very sure where to enter the market because what you think is a wave E, in fact, could be a wave C. And let me show you why. So this is the first scenario. I'm going to go to the second scenario. There is a second triangle forming on the FTSE. So if I move the trend lines, okay. Now we still have the wave A, wave B, but now what is happening is that we could still be in wave C, and if I move C here and E there and D here, you can see that triangle now. Okay. The reason why I mentioned this triangle is because very often the wave inside the triangle will be in 3 legs, like a bit here, 1, 2, and 3. So wave C could be in 3 waves, and this is why I was saying sometimes it's difficult to trade a triangle, because you think it's one triangle, in fact it's another one forming. So we have 2 situations. The first one is that wave E in the first scenario is already over and the market should decline, and then we've got a second scenario in which wave C is still underway, and that wave C will end near 6,700. Okay, so it could be a bit lower, maybe 66.80 or 90. Okay, so how do you trade a triangle in that situation? Well, it's in that situation, if you want to catch the move down in that case, then you have to go short at I would say 66.20, 66.30, because you want to, because it could be the end of wave E today, and this is why you have to go early. You have to make sure that you have a wide stop loss, because if it's wave C unfolding, you need to be able to stay short during that move up to 66.90, and this is why when I take a position, for example, in this situation, if I wanted to go short in that situation, I would make sure to go short as high as possible, okay, as high as the top of that wave, previous wave, which is 66.51 or 52. So a good entry point would be like 66, maybe 30, okay, with a wide stop loss, maybe 100 points, like that. If the FTSE carries on higher and the second triangle is unfolding, at least we are safe. So that's the way to trade the triangle, is to make sure that you catch the move, but at the same time you have to think about the alternate scenario, something else happening, and then place your stop loss at a reasonable level, so that you can, if the second scenario unfolds, at least you are still in the move. Okay, thank you for listening.